We're going to do a daily recap. 11/28/2011, 1:32 p.m. with a bull reversal at the major support lines that we covered all weekend and had covered from the bottom of the low of the Dow up here. We're just following up. That's what we're looking for. We have this great little move right here today because we do. And it's extremely moving right up here to the 50-day simple moving average on the daily. Okay? And I will also show the S&P 500 next. Dow Jones had a record high today. Dow Jones 1,523 even, up 291 handles. S&P up 33 handles. We'll be doing that chart next. And the Nasdaq comp up 85 and the Nasdaq 100 plus 73. When you look at the markdown on the Dow from here in the last several trading days, you had the worst on record since 1932 Thanksgiving week. That's the worst one that we had last week. This is the extreme volatility from that markdown and that liquidation where we popped up here and tested this 50-day simple moving average. All the key daily moving averages will remain within this rally based on everything being okay in Europe. And the debt crisis, in our view, hey, it is what it is, but we were short-term oversold. The S&P 500, unlike the Dow here, you can clearly see here on the S&P 500 of where the broader trend line was going to be 1150 here. And if we broke below it on this daily moving average, and we said that we were short-term oversold, MMTs, we did all this week over the weekend, that's going to be your resistance line right here. And that's going to be slightly below the 1200 handle. We're going to come up here and we're going to have a buy-sell program. This was a gap open up day. And it's the first Monday gap open that the market has had within its original bull rally that started back over here in October to this high reversal here. Now that we pull back to the critical mass level of that 1150, had we not had a super gap up Monday, things could have got real nasty at this major critical support line. And we featured bears, bulls, how the bull was at critical support levels and how the bear had made a 52-week bottom and ran up to its major resistance levels. And now we're going to have to close above here all of the declining moving averages on the S&P. So we're going to have resistance levels that we're going to have to deal with. And basically, it's the end of November. Portfolio dressing will be into play. The austerity around the world has cleared up. This is that S&P 500 daily index. That's the major support level, and major resistance level will be here right below that 1200 handle. And then we're going to worry, really, we're going to worry about the 1200 handle or so. And that's going to be right there. That's these two double tops. Resistance 1, resistance 2 MMTs. Naturally, we're going to get right over here, right about there. That will be resistance 3 at 1237 on the S&P, right up to the neckline. We had a severe markdown worldwide. We had liquidation in assets. We said that once that clears up, look for prices to move higher. Today is that day. It needed to start with the gap Monday. Nasdaq composite, same way. Look at the gap up above the trend lines that I had drawn the other day during our training. And I did. That was where they were selling it down to. Those were the upside rallies, but look at that gap. Look at that gap above these trend lines. That's very, very, very major. What I can do is go ahead and clear the lines. That was a major area right here. That was the October breakout to that high. And hey, we are going to deal with this area. We gapped up above it. That's what you want to see. You want to see where that last markdown was with worldwide events. They marked it all the way down. It starts with the gap and it needs to hold support right here tomorrow right? This trend line right over here. So if we pull back, we would hold that on a daily level and continue to go higher. The daily simple moving averages are all pointing down. You're going to have resistances on the way back up. And it happened on a gap Monday. And that's the conclusion, once again, of the Dow Jones, Nasdaq comp right here up 85 handles, and the S&P 500. Right now, it is day one with the gap reversal from this last sell-off that started right here at these highs. And basically, that's another little resistance level and declining moving averages. The daily sell signal has peaked at a bottom. We were short-term oversold in the cycle. We hit 6.57 on the percent DS, and now we're today with that big move. Now we're at 14.29. This is why we said over the training, over the weekend, and all the live videos on stock market funding for MMTs to look at, is that's when you gap above it, and this is that trend line right here, and that's the reversal, and this is going to be support, double bottom. So you got support 1, resistance 2, and ultimately resistance 3. Santa Claus rallies in play. That's the conclusion.